With journal entries, the double entry bookkeeping method is applied by ensuring that the value of debits are equivalent to the value of the credits for all journals that are processed. Let's do a couple of examples to illustrate this. Macmart is Africa's largest bricks and mortar retail operation. And Macmart's financial year runs from 1 January to 31 December. During the month of January, the company sold $50 billion worth of merchandise to customers. The merchandise sold was purchased by Macmart from suppliers for $30 billion. All customers paid cash for these purchases. What are the journals that will be processed by Macmart to capture the sales transactions? What would they be? Firstly, they would debit bank and cash $50 billion to show that they had received that money. They would also credit revenue or sales in the income statement to show that they had generated revenue. And the description they might put is cash receipts on sales of merchandise. This would be the first journal processed, and as you can see, the debits are equivalent to the credits. The next journal would be debit cost of sales in the income statement of $30 billion, and they would credit inventory in the balance sheet of $30 billion. What that journal is doing is it's showing the cost of sales, how much the company had to pay to buy that stock, and at the same time, it's reducing the amount of inventory in Macmart's balance sheet because that inventory is no longer there, it's been sold to the customers. This would be the second journal processed to capture the transaction, and again, as you can see, the debits are equivalent to the credits. Now in the real world, you may find that the bookkeeper captures all of this as one journal entry. And this could be debit, bank and cash in the balance sheet, $50 billion, debit, cost of sales in the income statement, $30 billion, and then credit revenue in the income statement, $50 billion, and credit inventory in the balance sheet, $30 billion. That's absolutely fine. It achieves exactly the same result. And if you look at the total of the debits, they are equal to the total of the credits. I encourage you to do the journals in separate transactions. It's much more understandable and clear in your own mind. And if you make a mistake, it's easier to find and to fix it. But fundamentally, that is all double entry bookkeeping is doing. For each transaction processed, there must be an equivalent debit and credit. These journals will be grouped into the appropriate category in the T accounts and general ledger. When the general ledger has been finalized, a trial balance will be extracted, and this will be the basis upon which the annual financial statements are compiled.